Welcome to another far-reaching conversation. For anyone in the federal space, especially acquisition and business professionals, what we're talking about today is really foundational, which is basically the rule book for subcontracting policies and procedures. And this isn't just, about filling out forms. This is the government's framework for managing risk deep inside the supply chain.
That's absolutely right. And if you're a prime contractor, getting this wrong it can be incredibly costly.
Millions in disallowed costs, maybe,
Right.
for just losing all your flexibility.
Exactly. FAR Part 44 really sets up two massive control points. First, it tells you when you need explicit consent from your contracting officer before you can even award a subcontract.
Or at least a heads up.
Or at least advance notice, right? And second, and this is maybe the bigger deal, it creates the whole system for approving a contractor's purchasing operations, the CPSR.
The Contractor Purchasing System Review. That's the golden ticket, isn't it?
That is the golden ticket.
We should probably say right up front, though, that if you're dealing just with commercial stuff under Part 12, a lot of these consent rules, they don't apply.
Right, that's a huge carve-out. It gives commercial primes the agility they need, but when the rules do apply, you really have to know the landscape.
Okay, so let's start there, with clarity. Because the term subcontract sounds simple, but I'm guessing the definition is pretty broad.
Oh, it's intentionally massive. A subcontract is defined as any contract, and that includes things like simple purchase orders and mods.
Purchase orders, too.
Yes, anything entered into by a lower-tier entity to provide supplies or services for that prime contract. It's all about the flow of work.
So a simple PO for standard tooling could be a subcontract, and the subcontractor is just anyone down that chain.
You got it. Now, that golden ticket system, the CPSR, it's not just an audit of one transaction.
It's the whole system.
It's a complete evaluation of everything, your purchasing, your subcontract management, from developing the need all the way to completion. The goal is systemic trust.
That helps a lot, because the whole consent requirement seems to hinge entirely on whether you have that approval, on whether the government trusts your system.
It does. Let's look at scenario A. The contractor has an approved purchasing system. In that case, the consent requirements are, they're mostly waived. You get enormous flexibility.
So you can just move forward.
You can, unless the contracting officer specifically flagged a subcontract in the prime contract itself. Something high risk, like a critical component that needs special watching.
So it's like having TSA pre-check. You move faster unless you get specifically pulled aside.
Yeah.
What about scenario B for the contractor without that approved system?
The scrutiny there is intense. Consent is pretty much broadly required for subcontracts under any high-risk contract type.
Like cost reimbursement.
Cost reimbursement, T&M, labor hour, letter contracts. Anytime the government's on the hook for costs, they want to know where the money's going.
And crucially, there are also dollar thresholds, even for fixed-price subcontracts, if you don't have that system approval.
Yes, and this is a critical detail for business teams to track because it's not the same for everyone.
Oh.
For DoD, the Coast Guard, and NASA, you need consent for a fixed-price subcontract if it exceeds the greater of the simplified acquisition threshold or 5% of the prime contract's total cost.
The greater of, so you have to hit the higher number.
Right. But for most other civilian agencies, the language is different.
How so?
It's broader. For them, the rule applies if the subcontract exceeds either the simplified acquisition threshold or 5% of the cost.
Either or. Wow, so that's a much lower bar. It means civilian primes are probably submitting way more subcontracts for review.
There often are. It's a huge administrative difference, a bigger burden, for sure.
That's a great insight. And what about advance notification? That's related, but different from full consent, right?
It is. It's a statutory thing for cost reimbursement contracts. The law just says the prime has to give the CO a heads up before awarding certain subs, even if formal consent isn't required. It's just a notification that a big transaction is coming.
Okay, so let's say you're in that scenario B, no approved system, and you have to submit a consent request. You're basically asking the government to vet your business judgment.
You are. And that job falls to the administrative contracting officer, the ACO.
So what's on the ACO's checklist? What are they really digging into?
Well, their job isn't to second-guess your technical need. It's all about financial and policy compliance. And the checklist shows what people usually mess up.
Okay, like what? From a business management perspective.
First, they check if the subcontract aligns with your approved make-or-buy program. Did you tell the government you were going to build this in-house and now you're suddenly buying it? That's a red flag.
I see.
Second is small business compliance. The ACO is literally verifying that you're meeting your Part 19 goals for on all the categories.
So it's not just a proposal stage thing.
Right.
It's enforced at the transactional level. What about the actual price and vendor choice?
That's the core of it. The ACO has to confirm you got adequate price competition. And if you didn't, your sole source justification better be airtight. They'll review your entire cost or price analysis.
The documentation must be immense.
It is. And the last check is simple but critical, making sure the sub isn't on the exclusion list. And Sam?
It's a full-on sanity check. They want to see the prime acting just like the government would.
Exactly. If your purchasing system is already known to be weak, or if there are close ownership ties between the prime and the sub.
The affiliate issue. Worries about non-arm's length pricing.
Precisely. Or if you're proposing a high-risk subcontract type, like cost reimbursement, without a really good reason, those get a deep look.
Let's talk limitations, though, because this is a huge liability point. The CO's consent, it doesn't actually protect the prime, does it?
Consent does not automatically make the subcontract terms, the price, or most importantly, the costs allowable.
So DCA can still come in later.
DCAA can come in 3 years later and disallow $1 million from a subcontract the ACO consented to. The liability always stays with the prime.
And there are some things the CIANI is just flat out forbidden from consenting to, right? No matter what.
Yes, 3 big shall nots. First, no cost plus a percentage of cost subcontracts. That's a universal ban.
Okay.
Second, they can't agree to anything that forces the COGA to deal directly with the subcontractor. The legal relationship, or privity, is strictly between the government and the prime.
And the third.
No clauses that make arbitration between the prime and sub binding on the government. The government always keeps its own right to settle disputes.
It's all about protecting the government's position. But what about the subcontractor? Is there any path for them if there's a dispute?
There is. The policy allows for a clause that gives the sub the right of indirect appeal, so they can ask the prime to bring their dispute to a government board on their behalf. It gives them a formal route without blurring the lines.
Okay, let's shift from the single transaction to the whole system. The CPSR. What's the main goal there?
The objective is simple: to determine if the government can trust your entire system. Are you efficient, effective, and compliant when you spend their money? The CPSR is the evidence the ACO needs to grant that trust.
So what are the triggers? What puts a contractor into this review cycle in the first place?
The main threshold is about volume and risk. If your sales to the government, and this excludes competitive fixed price and commercial contracts, are expected to top $25 million in the next year, the ACO does a review to see if a full CPSR is needed.
25 million. And once you're in the system.
You're in. The ACO has to reassess the need for review at least every 3 years.
So it's basically permanent surveillance. When the review team comes in, what are the biggest pain points they focus on?
They're looking at the same things as a consent review, but at a macro level. We often see issues with the quality of market research or with pricing policies, especially around getting certified cost or pricing data from subs.
And what about that affiliate issue we mentioned?
That's a huge one. They look very, very closely at the treatment you give to affiliates and sister companies. Are the deals truly at arm's length?
It requires some very strict internal controls, I'd imagine.
It does. They also heavily scrutinize your whole small business subcontracting program and how you manage things after the award, like progress payments.
And if you pass, you get that coveted waiver. But what are the big failures that would cause them to withdraw that approval?
Withdrawal is a sign of a major systemic problem. Things like recurring failure to get proper cost or pricing data, or major failures in your cost accounting standards implementation, or chronic problems with small business compliance.
And that withdrawal is punitive. It means you suddenly have to get manual consent for everything.
For potentially hundreds of subcontracts, yes. It can grind a high-volume operation to a halt, and the process is fast. The ACO notifies you, and you have just 15 days to submit a corrective action plan.
Wow, that is a tight timeline.
It reflects the stakes involved.
Okay, let's wrap up with Subpart 44.4, which is all about commercial products and services. This is so important because the government wants access to commercial tech without, burying those companies in federal rules.
Oh, that is the core objective. The policy is that contractors must, to the maximum extent practicable, use commercial products or services. It's about letting the government benefit from the commercial supply chain.
And this is where the rules on flow-down clauses become really important, isn't it?
It's the key distinction. The policy is clear. Prime contractors should not be required to apply most of their prime contract clauses to their commercial subcontractors. This is what keeps commercial vendors willing to play.
But there must be some exceptions.
There are two. First, clauses that are required to implement a specific law or executive order that applies to the subcontractor. Think, certain labor standards.
Okay, that makes sense.
And second, clauses that are just considered customary commercial practice for that item. Anything beyond that is generally seen as overreach.
So this whole framework, it's really about structured oversight. It balances the prime's need for flexibility, which you get with an approved system, against the government's need for strict accountability with taxpayer money.
It really does. But it creates this tremendous strategic pressure. I mean, for anyone listening, you should think about this. Given the level of scrutiny we've talked about, from vetting affiliate pricing to justifying every non-competitive award and proving your small business compliance, what kind of massive long-term investment in people, in IT systems, in internal audit is required just to maintain that flexibility from a CPSR approval? The cost of compliance really is the cost of doing business at scale with the government.
If you find these podcasts helpful, then reach far for that subscribe button.